Hello, day traders. The US stock market spiked on Wednesday, having overcome pessimism about the Russia-Ukraine crisis. Perhaps US trading floors will carry on growing today. This scenario is especially welcome if the Russian and Ukrainian sides make progress in the talks today. However, apart from geopolitics, there are other factors to influence the US stock market. And let's discuss such factors and try to predict their impact. The US major stock indexes closed with notable gains. The Nasdaq closed 1.6% up, the Dow Jones jumped 1.8%, and the S&P500 showed their best performance this time. It printed intraday growth of 1.9%. The main catalyst of the revival in markets inside and beyond the United States was certainly the speech by Jerome Powell in Congress. Our analysts expect the S&P to trade within the corridor between 4,350 and 4,420 points. The index is now trading at 4,386, so the forecasts have come true. In his speech, the Fed's leader confirmed that he would rather propose a rate hike by 25 basis points. The regulator is ready to make this crucial step on March 16. Judging by the bounce in the US stock market, investors have already priced in this move and have dispelled fears. Meanwhile, market participants are pleased about a robust pace of growth in the US economy and the labor market. The weekly update from the US Labor Department reads that the number of initial unemployment claims declined to 215,000 last week from 320,000 a week ago. On the flip side, the number of continuing jobless claims rose to 1,476,000. The ISM non-manufacturing PMI, that is year-to-date, is projected to increase to 62 points in February. The US dollar leapt to 20-month peak at 97.83 in light of the speech by Jerome Powell. The greenback had been growing steadily before the event as a safe haven asset amid the hostilities in East Europe. Remarks by the Fed chairman on Capitol Hill cleared up market sentiment on the US dollar. Now everyone is aware of the Fed's further policy moves. Interestingly, if the regulator finds it hard to tame high inflation with a moderate tightening, it will resort to more aggressive rate hikes. Such prospects are putting strain on other major currencies. Currently, investors are unnerved by the ongoing crisis between Russia and Ukraine. Besides, investors are braced for snacks in supply chain and inflationary risks. Today, the US dollar index is trading high at nearly 97.62. It's likely to stick to the upper border of the corridor between 97.00 and 97.80. While the Fed Reserve is going to raise the key interest rate, the Bank of Canada has already increased its target overnight rate by 25 basis points to 0.50%. The regulator took this decision for the first time since October 2018, and the central bank intends to continue a series of rate hikes because the economy has gained momentum, but inflationary pressure is still high. Thus, the driving forces inside the USD CAD pair are slightly different now. Yesterday, high oil prices took a back seat in favor of the strong US dollar. Today, the geopolitics, the Bank of Canada, and a huge 5% spike in oil prices pushed the currency pair down. The USD CAD pair is trading at 1.2639 on the daily chart. The pair is holding inside the corridor between 1.2550 and 1.2650, trying to break 1.2600. And let's see if the Canadian dollar is resilient enough to assert strength. It seems that the bearish trend is getting weaker now. Speaking about crypto assets, the US dollar and Bitcoin are struggling as equity strong rivals. Let me remind you that some analysts have found out a correlation between Bitcoin and major US stock indexes such as the Nasdaq and the S&P 500. In practice, the flagship cryptocurrency has defied this pattern of behavior. For example, currently the stock market is unable to gain ground, but Bitcoin, on the contrary, is developing a rally. To compare, Bitcoin surged by 14.5% on February 28, but the S&P 500 dropped by 2%. The most popular crypto is following its own path on the back of the Russia-Ukraine crisis. Demand for Bitcoin boosted thanks to donations in cryptocurrencies and growing interest in digital assets in the light of the sanctions imposed by the US and its European allies. Analysts at Arcan Research believe that cryptocurrencies will become a more important asset free from politics. And that's all for today. We keep monitoring the financial market situation. Subscribe to our channel and see you tomorrow.